All right, guys, welcome back to another one of our market updates with Mark and Landon McKernan. We're going to talk through some of our activity on our team and what we're seeing in the market as well. One thing that I know we've been super active on is sale-leasebacks.
Yeah.
The majority of our transactions, especially over the past couple of years, have been sale-leasebacks. And that's where the seller sells to an investor and leases back for a period of time. And ultimately remains as the tenant. I mean, what are some of the advantages that you're seeing on sale-leasebacks?
Yeah, there's actually quite a few. So obviously with rates going up, it's a cheaper access to capital instead of going to a bank. So you can sell your property, let's just say on the average of kind of what we're seeing at a 6.5% cap rate. And a bank right now might even charge you from 8 to 9%. So it's a cheaper way to access that capital that you got locked into your real estate. Obviously, building values are still pretty high, which is really nice. And then you continue to operate out of the property for as long as the leaseback terms are as well. So it allows you to inject that capital back into your business, maybe buy another building or consolidate. It's really up to you. And it does have flexible lease term options because you are in charge of the terms that you want to negotiate on as well, which is good. But that's kind of what we've done over the last, I would say, 24 months, a lot of, and it's helped out a lot of business owners unlock that capital in their real estate and get better deals than bank financing traditionally.
Yeah, I think those are all really good points. Actually, one thing to touch on that we're seeing is obviously a lot of people are looking to expand right now as well. There's very limited inventory out there in the market, and by doing a sale-leaseback now, they can lease back for a few years, unlock that capital, have it ready to deploy when the next building comes available, and that way they have the capital free too.
Yeah, I think it's pretty solid, and I feel like it's a pretty proven strategy. Oftentimes, I'm sure we see this, I don't know, maybe 8 or 9 times out of 10, where the real estate is more valuable than the actual business. So it's kind of a nest egg for a lot of these owners that might have been operating for maybe 20, 25 years to get over that next hump as well. So
I agree.
So I guess next thing we wanted to cover is, what's going on in the economy. I'll let Landon share some of his insights and what we've been reading as well.
Yeah, so there's obviously a lot going on all over the economy right now. A lot of people are asking questions, trying to predict what's going to happen next. I think what we're trying to do is find the data and really look at the numbers, because ultimately we can't predict the future here. But one thing that's happening right now in October is student loan payments are coming back into effect. I know this affects a good majority of Americans. I think about 44 million Americans have student loan debt, and they haven't had to pay it over the past 42 months. And so it's going to be really interesting to see, if this is something that people have budgeted for, if this is something they've been looking into the future at, and really how it affects the overall consumer strength as well.
Yeah, it's going to be eating away at, monthly income for a large part of the population as well. So I think that kind of goes in hand with consumer spending and savings rates. So obviously, spending rose a little bit over the summer. I think it was 0.8% in July. And then saving rate actually dropped to about 3.5% last month, lowest since November of 2022. So that's definitely something to watch out for. And the other thing that we're definitely going to consider is going into the election year. What is the Fed going to do? Are they going to prop up the economy by lowering rates? Are they going to keep steady with their plan? So these are all things that we're really taking into account, especially with our advisory approach too.
I agree. And just looking at the numbers, it still seems like the consumer's overall very strong. I know unemployment's extremely low still. So it's going to be interesting to watch over the next, 12 months to see how that plays out.
Yeah, it'll be interesting. So kind of going over some stats generally for Metro Phoenix on the industrial side. It's actually still really healthy for industrial. Definitely one of the more healthy asset classes in the major food groups, if you will. So vacancy rate is about 6.3% currently, and it's up from 4.1% in low to mid 2022. Definitely a little bit of an increase. One stat that we were looking at is there's a lot of deliveries coming in Q4 of 2023 and then Q1 of 2024. It'll be interesting to see how everything leases out in those coming months as well.
Correct. And as we looked through the projects that are set to deliver, it looked like most of the projects are 400,000 square feet up to 1.6 million. So we're talking really big developments here. And hopefully we'll be able to find the tenants to fill those spaces as well. I know a lot of tenants are still looking to expand to Arizona and come to a business-friendly state.
Yeah, I think going back to what you're saying, it's, more of that contractor yard and contractor small bay industrial, that there's not enough of that, which is why those prices are really still sustaining. Anywhere from the mid 200s all the way up to in some cases over $300 a foot, which is insane. I don't think anyone would have expected that, to be honest.
Yeah, that's a good point. And the majority of the product that's set to deliver is really on the outskirts of town. So we're talking Queen Creek, we're talking Avondale, pretty much the whole west side of town. And we're really not seeing a whole lot of development that's in centrally located areas like Tempe, like Gilbert, like Chandler. And so for that reason, we've continued to see a lot of demand, and especially on owner-user pricing, it's remained very elevated.
Yeah, I feel like they're fine with biting the bullet on the rates as long as they can secure the building and then lock in, whatever their monthly payment is, so it's not as much as what their lease would be, and it wouldn't be as much of an uncontrollable. So.
Exactly. Yeah. Let's talk about cap rates for a second. Yeah. Obviously, interest rates have gone up significantly over the past couple of years, and investors are trying to seek a cap rate that's as high as possible so they can place debt on their sales. I know right now we're looking at 6.2% cap rate being the average across the valley. Just a year ago it was at 5.8. Where do you think cap rates are going next?
Definitely up, but I mean, I think this is really surprising, seeing that they only went up to 6.2%. I mean, we're kind of coaching a lot of our buyers and sellers, be prepared for 7% cap rates to come back, 8% cap rates to come back. So not as much of a hike as what I would have expected, to be honest, but real estate's obviously a little bit longer to, take into motion as well.
Yeah. Another thing to consider with that too is cap rates are a lagging indicator. So a lot of the transactions that are showing up in those numbers were negotiated, 3, 4, 5 months ago. Yeah. And they were able to secure that bank financing. So I would imagine the deals that are going under contract now, and we're even seeing it in our own business with deals that are closer to 6.5, 6 3/4 on the cap rate.
Yeah. I think it's right on the money. So definitely in line with expectations. But yeah. Let's see. So for our recent activity, going back to Sale-Leasebacks, a few deal stories, if you will. I'll let Landon share a little bit about these two deals that we recently closed, I want to say 2 weeks ago.
Yeah, so we closed a sale-leaseback transaction with a company called Guard Top. It's an asphalt seal coat company. They're actually nationwide, but have a location here off the 17 Freeway. That one, for example, took a lot of persistence and a lot of follow-ups to get the listing. And for that one, it really came down to showing the value of why doing a sale-leaseback makes sense, why it makes more sense to have that capital free versus tied up in real estate, where you can continue to grow your company a lot quicker than if the equity was locked up in the real estate, where you're only gaining a few percentage points a year moving forward. And so for that one, it was really able to benefit the tenant and help them grow moving forward.
Yeah. The other one is a much smaller deal, but I love the deal story for this, mainly because it was on the market for a year. You called this guy on a Saturday, like we normally do with a lot of our calls on Saturdays, if you will, and it was actually pretty successful. So I think that one was huge. We ended up selling it for over asking and got it under contract within 2 weeks, but that was awesome to see.
And that was 3333 to 3335 East Broadway Road. That one, it was on the market for quite a long time. I know the owner was sensitive about the tenants and not wanting to scare the tenants unless a deal was in place, which is totally understandable. Yeah. I know that's income that is is obviously significant. And so that's why it made it really challenging to sell in the past. But being able to do the Matterport, working on the weekends, doing showings in the evenings and on the weekends was really what ended up selling that deal.
Yeah, I think it was a great deal story. So 2 keys, I guess, of persistence for the kids at home. So we'll go over some recent trades as well, just with some additional stats. That covered 2 of them with Broadway, and then also Guard Top right off of Maricopa Freeway. These next 2 are actually in Chandler. One was the most aggressive price per foot I've seen in a while, especially for something of this size. So this is 2130 South Douglas Drive in Chandler, right across from the airport. Just shy of 15,000 square feet, sold for $306 a foot. Absolutely insane. Was built in 2017, has 20-foot clear height, a truck well, and sits on just shy of an acre. Obviously, small lot, but having those amenities, really nice building, and a user ended up actually buying it for their own business. The next one's down in Chandler, still sold for a pretty aggressive price. This one's an older building. It's 445 North Austin Drive, and sold for $280 a foot for just over $3 million. It was about 11,000 square feet, has 17-foot clear height, and was built in 1999. The next and last one was actually down in Chandler as well. This is a part of a portfolio, and it was 7100 and 7010 West Erie Street. These are about 75,000 square feet, sold for $194 a foot, and like I said, it was a portfolio of 2 properties, both built in 1992, 24-foot clear height, I-1 zoning, full sprinklers, the works, but pretty impressive to see prices still etching those numbers. I would say this late in the cycle, if you will. So
I agree. We've continued to see prices climb, especially on the owner-user side. And they're really significant increases from even just a year ago. Or 2 years ago. So going into a couple of the trades that we just sold over the past couple of weeks, we've got 3533 to 3535 East Broadway Road. So that was just under 6,000 square feet, mostly a flex building. It had 2 suites and 2 entrance points to the property. And that one sold for $158 a square foot, $930,000. It was actually over asking. We had it listed at $900,000. But just due to the amount of activity we had on it, we were able to sell it above asking and have that under contract within just a couple of weeks of listing it. That one was built in 1979. It has 14-foot clear height. It was a heavier office building. I know it's a little bit less attractive for some of the industrial users, but just considering the size range, it's still a really attractive property for a lot of groups who need that warehouse office combo. Also had 2 grade level doors and an evap cooled warehouse on that one. So really nice property overall, and we were able to get that one done quickly. Next trade's at 1048 West Maricopa Freeway in Phoenix. This property just sold at $264 a square foot, $4.6 million. It was actually a cash sale and a 10-year sale-leaseback with 4% annual escalations. Tenant was Guard Top, which is a seal coat manufacturer, nationwide company. Really strong credit as well. Building was 17,400 square feet, built in 1974, and had just over 18-foot clear height in the warehouse and 25-foot clear height in the other metal building on the west side of the property. The warehouse was evap cooled, and another key point for this trade was it had a digital billboard, which generated pretty significant revenue, and that's why we're seeing a little bit higher on the price per square foot than some of the other investment sales in the area as well. So that definitely added a lot of value to the sale.
Cool. I think that covers it for recent trades over the last, I would say 4 or 5 weeks. Thanks again for tuning in. We'll see you guys next time.